Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome to the Friday, December 17, 2021 Market Plus. Back with us, Naomi Blohm. Okay, so we take notes on what you say during the broadcast. I don't know if I've ever told you that. And we tweet things out. Okay. We take turns. You wrote a couple of really good lines, and so I'm really curious to see, expand upon some other things, because I didn't get a chance to ask anybody's social media question, because that's just, Twitter's full of great things. So let's just start off the bat with Colin in South Dakota. He's asking you, what do you predict the corn-soybean ratio to trade at for most of quarter one?
So if you're new to the corn-soybean ratio, because sometimes people are, so it's usually right around 2.5. So that would mean that the soybean price is 2.5 times the corn. And so for the new crop, meaning November beans and Dees corn, I did look at it before I came here, and it was right around 2.4-ish. So it's kind of nearly normal. And so when that number gets higher than 2.5, that means it's more attractive for soybeans to get planted. So right now the market is essentially saying it's about equal. Now I do think that it's going to ebb and flow and churn, and it could be aggressively one way or the other, but we're waiting for the key components of the USDA report in January, and of course waiting to see what South American weather and how that fares.
By the way, we will see you back in January. I'm going to pull all of these comments back. And she said, wait and see, wait and see. So you should maybe not say that so much. Okay.
I say it a lot, actually.
But it is a big deal. That report is a big deal.
It is huge.
Because it's a combination of name every sporting event together.
And it's a lot to digest. And, you know, back in the old days, it was great because it would come out in the morning, and then you had like a good hour to think about it and look at it before the market opened. And now it's bam, 11 o'clock. And so you're trying to like look at every single category and see what the main moving parts are and the bigger components. And by then the computers already took over.
Well, is it better now that it's in the middle of this session?
I don't care for it that way, but what does it matter what I think in that
Well, there's people at USDA that do watch the program, so you're on record as saying go back to...
I liked it when it would be, if it came out on the pause, like the morning pause, like if it came out at 8 o'clock and then we had a half hour to think about it, that would be nice.
Fair enough. I got you. All right, well then let's go into 22 with Dan in Oregon. Can Dees 22 corn stay above $5 for all of 2022?
I think it can stay above $5 between now and May or June, and then all bets are off. It depends on how many acres get planted. It depends on the weather this summer, but I think from then and now it sure can. Of course, trying to figure out how many acres of corn we will have or won't have because of these high input costs, that is still a process evolving. I don't think anyone knows the answer to that yet. Of clients I talk to, a lot of people are saying they'll try to stick to some type of regular rotation. But then there's the little bits where there's up for grabs on extra parts. And when I was out in the Dakotas just a couple weeks ago, there was a lot of people that weren't sure what they were going to be planting yet. And they have a lot more choices out there. And even North Dakota, of course, between spring wheat and soybeans and sunflower seeds and barley and all of that. So I think that's why the spring wheat price is staying higher. And I think why oat prices overall are staying higher, and all of the grain prices for now are staying higher until we have this better understood.
Okay, well, kind of what you said, and let's expand upon it with Glenn in Ohio via Twitter. Which fiscal quarter in 22 would you expect to see the greatest amount of volatility or price movement in the grain markets? And then Glenn asked, should we be utilizing option strategies to protect margin until crop insurance prices are established?
Second quarter probably has the ability to be the biggest crescendo of the market, but I am going to say first quarter has its own ability to have some exciting things happen because of the January USDA report. But also February makes me a little nauseous because it's seasonally, that's a lot of times when the grain markets peak, is the last part of January into early February. But we also have the Olympics coming up, and so I think China behaves until the Olympics are done. All bets are off after that. I also worry about Putin and Ukraine.
Right.
And the thought is that if he's going to do anything, he's going to have everything ready to go by early February. So there's some of these outside market influences that could come into play. Also, technically, when you look at the corn charts, the soybean charts, even the hog market, they are consolidating into tighter and tighter trading ranges. And once they have a reason to break out of the range, the more market consolidates, the bigger the breakout is down the road. So from that standpoint, I think first quarter could see just some kind of a major price reaction from a technical standpoint. So I think it could be both, just depending on the timing.
Well, let's go into the second question, though, about option strategies. Because given what you just said,
Yeah.
all that volatility, if we're not sleeping at Christmas, January doesn't sound like there's much more slumber coming then.
I would get some major hedges in place ahead of the January report, just in case there's a bearish surprise, just in case, because we'll probably see prices work higher into that report on the hopes that we'll see tighter carryout numbers for corn and soybeans. Seasonally, prices usually work higher into that report anyway. We'll have some sort of a big weather to do with South America. But I think now you're protecting tremendous value, and you have to be protecting it, because now we're starting a year where we have all commodities starting at higher prices, much different than other years. So it would take a lot for the market to keep going higher from here, and it would be bad things to make the market keep going higher from that we don't want to have happen.
Okay, I'm not going to show you the questions again, but let's go to this next question, because the sky is still falling with Roger's question. Roger asked us via Twitter, what are the odds we're moving towards acute shortages in grains and oilseed crops given weather, transport, and processing issues? And you can throw in everything else you just mentioned.
I'm going to bet on the good old USA and high prices cure high prices, and that will always come out victorious and have a crop. But of course, it is something that makes you nervous because, again, my belief personally is that old crop corn ending stocks are tighter than the USDA has been admitting, because why else in August and September and even the first 3 weeks of harvest would we have basis levels as strong as they were? And when I called clients and said, okay, what do you got left in the bin? The folks that always had a quarter of their crop left in the bin in August were out. So I just think that is a tighter situation. We have strong demand. And, we had decent crops this past year, there's no question. But if you have less to start with from the year prior, there's less carry-in. And so there's so many questions right now with the marketplace that we need answered.
Okay, so you're calling clients. There's a lot of clients, from what I'm hearing from people who sit in this chair each Friday, that say we're begging them basically to sell. But there's farmers who are like, no way. I am not getting caught in that scenario when somebody calls me this summer and I'm out of grain. But you have to play both sides, don't you?
Well, you are a business person. So as a business person, you have to sell your product. And so when you're starting your sales with $6, I think that's a great place to be, really getting going, because when was the last time you've been able to do that? Again, for the prices to go substantially higher from here, you need a lower US dollar, you need horrible weather in South America, you need a friendly USDA report here, and you need the world essentially to kind of cooperate and make sure the exports keep humming along. So, yeah, I do think we can see prices work higher into the new year, but I want to be a seller on that rally.
Fair enough.
Old crop, new crop, lock in. Here's another fear in the back of my mind. Okay, what if African swine fever hits it here? Okay, so all of this wonderful demand that we've had for soybean meal and for DDGs, now if all of a sudden we don't have a hog herd to feed that to, whew, there goes your price. That would be one of those black swans that could come into play. So always make sure that you have the value in front of you protected. Be thinking about it, especially as, seasonally the market works higher in early winter. So make sure that you are capitalizing on that.
I'm not trying to keep bringing up awful things.
It's okay.
But this also ties in, I won't say awful, it is for those who are feeling this, but let's ask Lance's question in Illinois on Twitter. How do you see tapering, the less printing of money and raising interest rates affecting the grain markets? Because there's the other, we're out of shoes. We got more than Imelda Marcos and shoes here that are dropping in this market. But this is another thing.
And the answer to that is, I don't know. You would think that eventually, interest rates working higher or inflationary concerns all comes to play, and how does that affect the dollar? And you would think the dollar in some regards would go lower, but then if we're the best game in the whole world, sometimes the US dollar goes higher anyway. So I don't know is the honest to Pete answer to that question, but yeah, that's something I'm watching and wondering all the time too.
All right, I want to thank Jamaican farmer Matthew and Gary for your great questions, but I need to finish up. I'm going to combine a couple things here. Scott in Augusta, Wisconsin. If you had to pick one commodity with the most upside in 22, which would you pick and why?
Rice and hogs.
Okay, that's the first.
Okay.
And now the why.
So a year ago, I'm going to pull a Ted Seyfried right now. A year ago, I said how, love you, Ted. Okay, a year ago I was asked this question and I said spring wheat is the one to watch. Spring wheat has the most potential to rally, and it had worked higher and it still is at lofty levels. And it was, priced historically low. Right now the hog market is technically showing signs of bottoming signals, and I really worry about African swine fever and becoming a big issue in this country. Rice, I think, becomes a bigger player because there's so many rice acres in the United States. And I honestly think that domestic demand is going to pick up more than what people realize from the standpoint of inflationary concerns. And when I go to the grocery store now, it just seems like every time I go, the prices keep creeping higher. And so when you're on a set budget and set income, there's certain things in your grocery item list that you don't substitute out. But I do think that a way to fill bellies of little kids and for people who are really on set incomes is to see rice. And I'm thinking rice demand is going to work higher. And technically speaking, also, rice posted bullish reversals on charts too. And it's pretty undervalued.
It's a lot to chew through this episode. I didn't think we were going to get to all of that stuff. That's a heavy...
You got me.
I know. I appreciate it. You should see her notes, by the way, when she comes in. She's studying up until the last minute. I appreciate it. Naomi Blohm, good to see you. Thank you so much.
Thank you.
Always learn something when you sit here. And next week, we're going to learn again because we're going to look at how fishing led to winning the World Food Prize. And Elaine Cubb, she'll analyze the market. She's always got something for us to think about as well. Thank you for watching and have a great week.